The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw a lower day in the grain and oilseed trade on Friday. We did finish just a little under the unchanged mark, but all in all, another tough week in this grain trade. Cattle futures found a little support heading into the cattle on feed and cattle inventory report out after the close Friday. Outside markets relatively mixed as well. Let's recap the week in the trade. Joining us for a conversation here on Market Talk, we're pleased to welcome Sue Martin with Ag and Investment in Clarion, Iowa, to the show. Sue, it is good to connect with you. Thanks so much for joining us today.
Thank you for inviting me.
Well, it's been a tough go in the grain and oilseed trade here as of late, Sue. And I know this week we watched various trade deal frameworks get rolled out and more, but you know, all in all, this weather pattern just seems to be kind of weighing on everything out there. And for the most part, I know there's some pockets. I know in your area, we've seen some heavy rain there in north central Iowa as of late. But man, oh man, it just seems like everything is kind of on the bearish side of the boat in the grain trade right now, Sue.
Well, it is. As we came into Friday, we started to be a little higher and then turned back lower. And I think what it is, we're ending the week. Expectations are for good crop condition ratings again on Monday. Corn maybe to stay unchanged to possibly improve. I think will be unchanged to maybe 1% less, only because we are catching just too much of a good thing. Soils are very, very saturated in Iowa, especially. And of course, last week, Iowa came in at 86% good to excellent. How much more is it going to get? And it's probably the best rating for the third week of July in the last 5 years. And then we have 74% of the crop good to excellent in nationwide. And that's second to the year, I believe, of 2016. And that's the best 2 years in the last 20 years. So, you know, the trade, every time it rains, it's like rain makes grain. And now they're getting this attitude that some of these crops that have tassel wrap and what have you are starting to sort of come out of it. And the attitude is, you know what, maybe, just maybe, we're going to see a yield that pushes towards 183. And so every time we catch a bounce, they're there willing to sell into it. And farmers are very slow sellers. In the meantime, they probably have some of the lowest amount of new crop grains sold ahead, which is a little bit of a concern. But at these prices, it's, you know, when you're sitting right against $4 and if you've got a discount basis on new crop, you know, you're not looking real profitable either. So at this stage of the game, it'll be all about crop insurance and revenue insurance at the end.
Well, and you bring up a good point. The profitability just isn't there. You look at 420, 419 D's corn on the board, and you mentioned it, basis levels are lower than that. November soybeans, 1021 at Friday's close. I mean, these are numbers that, you know, we've worked somewhat off the round numbers of 4 and 10 on the board. But yeah, again, I mean, you just look at those numbers, and to your point, they're not very attractive to producers right now.
Well, they aren't. And the thing is, when you look at the end of June, November beans closed at 1027.5. December corn closed at 425.5, and September corn at 409. I can't honestly say, even in the face of potential trade agreements between now and the end of, you know, the month next week, it's hard to look for the grain markets to close higher for the month of July. I just don't see it at all. So that means then we push down a little bit more, maybe into August, and then we'll see what we're made of. We have timing coming in around August 11th. And interestingly, last year, August 12th, we made a low. The year of 2016, when we had all the other similar crop condition ratings, we put a low in on the 12th as well of August. Bounced nicely, then came down and put the bottom in on the last trading day of August. So we might see a low in August and then start to turn. The weather sources that we are hearing and seem to respect, and they've been right on this year, they've called for the heat, did not call for dryness. They thought we'd be wet, and we are. They're looking at August to be very agreeable with crops, and but September cool and wet. Now that might not be so good. And in the meantime, if you look at soybeans, beans don't like wet feet. And that's the one thing I wonder about with soybeans, if either A, they haven't gotten enough growth on them yet to be able to tell if they're going more to stem because of all the heat and the moisture, and to get a chance to, look at nodes and what have you. But, it's a concern. We might see white mold this year. We're already seeing tar spots show up in corn. So the jury's still out. It looks like it should be an ideal year for yields. And you look at where some of the best ratings are, and it's Nebraska, Iowa, maybe central part northern Illinois, on across northern Indiana. Well, that is an area, if you kind of oval it, that's an area that could make up for a lot of sins somewhere else.
In terms of thinking about some of this, we have a long way to go, to your point, to finish off these crops. So from a risk management aspect for corn and soybeans, obviously we remember that risk of trading futures and options is always substantial. But in general, is there anything producers should be thinking about here as we near the end of July, heading into this key month of August and potentially into fall harvest, that, to your point, some of the weather indicators, it could be a little wet as we roll combines. So anything from a risk management standpoint we should be thinking about right now?
Well, I think with the markets having declined as much as they have, and the highs early in the year in February, years of a five, not always, but if you go back, we have data going back to 1915. If you look at them, they more or less tend to be down years. One year was not, and that was 1995. It was the outlier. But more times than not, if you haven't priced by now, I hate to say it, you're kind of behind the eight ball. And so if you do market grain, you need to maybe then start to look at maybe some call strategies coming back up to protect against that. But it's hard to market now if you haven't already done so. Maybe the market will offer us a rally, a short-term bounce when we get into August, and maybe take advantage of that. But the funds are feeling very confident. And I would have to say, when I look at the soybeans, now there's the crop that has less acres. We need beans because of our renewable fuels plan down the road. So, to crush, it's the soy meal we're going to have plentiful supplies of. And I still think China will come in and take meal from us if in the end, when they decide to do something, it's so cheap. But the soybean oil, we're crushing for oil. And we're probably going to have to import some feedstock just because we won't have enough. And if the weather turns on us on the beans, that could give the bean market a reason to rally. When you look at a weekly chart on continuous, like say for November beans or whatever, it is such a narrow range, very narrow range. And ironically, if you look at price ranges or levels right now, we're very similar to the year of 2018, I believe it was, when we were talking with China about phase one and what have you. So, China's not going to come to the table easy. They're going to talk negative, just to drive our prices as low as they can. And then they'll be there.
Sue Martin with Ag and Investment joining us here today on Market Talk as we look at the week of the trade and more. And Sue, thinking of China and thinking of these trade deals and this August 1st date coming up here really, really quickly, what's been interesting to me this past week is this flurry of trade frameworks, Japan, Indonesia, Philippines, etc. But the markets, none of it seemed to move the needle, it seemed. And it seems like the markets are waiting on something with China or in India or something of that nature. What's your view on some of this trade news that we've been seeing and why it's not really moving the commodity markets?
Because I think the other than Japan, they're our second largest importer of U.S. corn. But besides them, I think, and Mexico's our largest importer of corn, but I think China's like the magical name that's always used to be here. And one thing, let's go back and look at 2018 to 2020 when then President Trump was trying to get China to agree to a phase one agreement. What was interesting was through that whole time into 2020, we've picked up on it that COFCO International Grains, which has an office in Chicago, was doing something totally out of the ordinary. And a lot of people missed it at first, but they were taking delivery of soybeans and the biggest bulk of beans. They were taking like 90, 95, 99% of the bean deliveries. And all of a sudden you had to say, wait a minute, China's got this ban on imports of US soybeans. Well, yes, but if they took delivery on the board, which wasn't the way they normally did things, you would have to say, well, those are COFCO's beans, so they're sending US beans under their name over to China. So they were still getting them. But now they've got Brazil, and it's all set up, and there's a huge crop down there. So it's like they've got options, and it makes them tougher to deal with.
I know we've seen some export sales this week. Corn export sales in general have been relatively solid so far the last several months. And despite the USDA snafu with the China announcement of sales earlier this week, they had to retract. We've seen sales to South Korea, for instance, Mexico. So by and large, weekly numbers have been pretty good, haven't they?
Oh, they have. In fact, if you look at corn, we've already met the USDA projection for exports on corn. So even though we don't have very much longer in the marketing year, we can just kick the can or move the needle a little bit and we're fine. We're still there. So I would suspect that the export number gets changed in the supply demand report. I'm wondering if it doesn't happen here in August coming up. But I will say this. When we look at the weekend here and the markets are lower and we've had these trade announcements, I think the market is saying, prove it to me. Let's get a lot of these trade deals done. What we've heard is just a pittance of what's out there. I will say, I think India stands to be a bigger market with time, and it's going to take some time. But I think India stands to be a much bigger market than China. They have the second largest population, but China has an aging population. And whereas India, 65% of their population is 35 years of age or younger. That's a huge demand market coming, I think, with time.
How about that wheat complex? We know that has struggled as well here as of late. Spring wheat tried to find some green on Friday after this week's Wheat Quality Council tour in North Dakota and parts of Minnesota. I know they found a little bit lower yield than last year. Last year was a record, though. What's your thoughts on what we saw across the wheat complex here this week as a whole?
Well, first off, for the spring wheat, Minneapolis wheat, I will say, last year we were a little over 59 bushel to the acre, and the USDA is estimating 59.6 or 7, and the tour came out at 49 something. Yeah, that's a big difference. So that could give a little floor under the Minneapolis wheat, but it's still over the 5-year average nicely. So put that aside. But then you look, and that's maybe more psychological than anything. But then you look at the hard red wheat, Kansas City wheat, and of course that harvest is wrapping up here fairly good. They're still catching some rains. And then you look at soft red wheat. Well, I think those markets, especially the KC, but both of those markets are being influenced by what is being sold over in Russia. And earlier this week, up until this morning, basically the sales in Russia were running at much higher levels than they had been. But this morning it looked like they turned the corner back down. And that too probably helped us sort of take our breath away a little bit. But longer run, I look at the wheat market and I still think there's more of a story coming for wheat too. The thing is, when you look across corn, wheat, even beans, but especially corn and wheat, we're dirt cheap, very cheap. And then wheat's kind of competing right now. It almost to come into the play of competitive against feed usage. But I look at the wheat market, and sometimes there's an old saying, oats know, wheat leads, and we need wheat to lead, and it hasn't done it yet.
Let's talk some livestock before we close out today. Cattle complex futures had a solid close on Friday, led by feeders. We picked up some cash trade ahead of the USDA reports and more. This cattle complex, I think, has surprised a lot of us time and time again. And I struggle to find what to say about cattle just as we continue to, find new highs and find volatility and more. What's your perception of this cattle complex right now, Sue?
Well, first off, producers are certainly blessed. And, we've been a proponent of buying puts for hedges for quite some time. We're a proponent right now of rolling those hedges up if you need to, or if you haven't hedged and these price levels are lofty, no doubt about it. They could still go a little higher. I'm not going to say they can't, but we're seeing signs here that concern me. First off, I'm seeing signs of producers who have been, some 100% hedged, and all of a sudden are throwing in the towel this week and haven't sold the cattle. That bothers me. I've seen that happen in the past years of experience. It never played out well. And then the other thing I'm noticing is those that have puts on, they're not 100% hedged, but they don't want to hedge. And I'm thinking, buy puts, buy out the money puts. Yeah, they're a little expensive because of the fact you've got volatility in here, but this is a really strong all-time record high market. I go back and I look at orange juice, which went to 551. Who would have ever dreamt? And it fell back to 240, 247. And now it's back over 300 or against 300. But the bottom line is this market will unravel. The one thing I worry about is the new world screwworm. If that comes into play in the U.S., and I think it's going to, not this week, but a week before, it was within 160 miles of the U.S. border. That's moving rather fast. And it gets into the U.S., it can come in on deer too. It doesn't just have to be cattle. But if we find that and I think it's great what the USDA is doing in efforts to thwart it or abate it. But if it gets into the country, I wonder if we won't open the door then to Mexican cattle coming in. And because what's the point of keeping them out now? We've got it. But on the same token, the other thing I think is that when I look at that new world screwworm, it likes to get into the bloodstream and feed on tissue or muscle. That's our meat. I know that the USDA says it's safe to eat. You have to just fully cook it. But how appetizing does that sound? And how many people fully cook their beef? And I'm afraid that could be the one thing that all of a sudden shakes the demand and they start to go to other products, so to speak. Because right now it's associated with beef, but so maybe they switch over to pork, even if it's just temporarily. And in the meantime, the packer last week bought 19,000 head with time. And we haven't seen the cash market really escalate this week. It's maybe held steady and firm, but it hasn't gotten stronger. And I think that's a sign where the cutout has been dropping. Make no mistake, when the packer gets his footing and is able to grab a hold of this thing, he's going to be unmerciful because they always tend to make their money back, and they will. So I see people who are not hedging or jumping out of hedges. I've seen that over the years, and it never played out well over time. And so my concern is put some money. If you don't like that margin call, fine. Buy some at the money puts and pray like the dickens you see the market still go higher. You're blessed.
Sue, this has been a fantastic conversation. Any final thoughts you would share? Anything you would reiterate to folks here on the show today?
Oh, boy. I'd like to share one thing. I did a study on cattle, and it was based on fat cattle. And it was based on years where the June contract made the highs for the year up to that point, and what happened with the August-September contracts. I wanted to see years of where the August contract took out the June high. And it was interesting because, see, so far we have not. The June high for a lead contract was 229.12. And of course, the August today, I think its high so far is what, little over 227. So I went back to 1976, 77. There were only 3 years out of all the years to current that we had this setup like we have this year, or the potential. 1980, we had an August high. We made a higher high than in June with the August contract. The market broke into December. In 2008, we had a higher high in June, followed by a higher high in July, which would have been your August contract. Then August went into a little inside range, but it did take out the June high. We made a higher high in September, and then, so that would have been your October contract, and then we broke into December. 2023, very similar again, higher high in June, and also sideways to a little bit lower in August, and then a higher high in September. We broke into December. So it just says, FYI, we're probably in the latter stages of this for now. And of course, today is still yet to come out, but the cattle on feed, but more importantly, the biennial report this afternoon might give us some insight too as to how much heifer retention we're seeing.
Sue, again, great conversation. If folks want to reach out to you there for a conversation at Ag and Investment, what's the best way?
Well, they can give us a call at 1-800-527-0051 or 515-832-6140. Everybody's got cell phones now, so it's almost like, why do we have an 800 number? But we do.
Sue Martin, Ag and Investment in Clarion, Iowa. Thank you for joining us here on Market Talk. Great to connect with you, and we will look forward to having you back on again real soon.
Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.